What's going on, everybody? What's going on? What's going on? I hope everybody is doing well today. I really, truly hope everybody is doing well. Today was an interesting day on the stock market, to say the least, but nonetheless, the stock market was still open. Nonetheless, the stock market was still open. Okay, so I don't want to waste anybody else's time. I don't want to waste anybody's time. So let's go ahead and get started today. So, again, welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure that you please like this, okay? Please like this, okay? Please like this. Please subscribe. This really, truly helps me out with the algorithm, okay? Make sure you hit that notification bell so you can be in the know every time I drop an episode so you can be there, because I may not drop episodes just on Wednesday. I may drop an episode on Thursday. I may drop an episode on a Sunday or Monday. Like, you never know what day I may pop up. So please just make sure you like this. Please like this. Please subscribe. Okay. And I hope I can really truly give you some value here. Now, the title of this episode really truly tells it all. Is Meta the artist formerly known as Facebook dead as a stock? And so Meta, they reported their earnings today, and they were down as much as nearly 20% in after hours trading, down nearly 20%, which was astonishing, to say the least. Okay, but we really truly have to ask ourselves, is this company dead as a stock? And the reason why I wanted to talk about this stock was because over the next couple of days, the next couple of weeks, whenever we go through all the earnings and listen to the call and whatnot, you're going to hear a lot of negativity about this stock. Everybody's going to say, sell the stock, the company is dead. Everything is going to be negative. Everybody's going to be so bearish and so fearful on this company. But me personally, the type of investor I am, when people are very, very fearful, I tend to get greedy, because I understand that where fear comes, opportunity lies. And so I'm going to really kind of step back on this company, look at this thing objective, and we're really going to answer the question, is this company dead as a stock? And just answer the question, why is this company down 19% after hours anyway? Like, we really truly need to go through the earnings results and see what happened, to put all this stuff in the context, just to see, because the company is not down 20%, 19% after hours for no reason. There is a reason why. And so let me go ahead and share my screen here, and let's get everything started. Let's go ahead and get everything started. And so to get everything started up the way that we need to start it, we need to go through the third quarter results. Okay, we need to go through the third quarter results that were released today. And we're going to go through these results, and we're going to see, how is the company performing? That's very, very important for us to understand. How is the company performing? Now, Meta reports third quarter 2022 results, and our community continues to grow. And I'm pleased with the strong engagement we're seeing, driven by progress on our discovery engine and products like Reels, said Mark Zuckerberg, Meta founder and CEO. While we face near-term challenges on revenue, the fundamentals are there for a return to stronger revenue growth. We're approaching 2023 with a focus on prioritization and efficiency that will help us navigate the current environment and emerge an even stronger company. Now, we need to look at the financial highlights for the third quarter. The company had 27.7 billion, in revenue, down 4% year over year. The company had 22 billion in terms of costs and expenses, which was up 19% year over year. That's not good. The operating income from operations was 5.6 billion, down 46% year over year. Not good. Operating margin was 20%, which was down again from 36%. Not good. Provision for income taxes, that was down to 1.18 billion. Effective tax rate went up went up from 13% up to 21%. Net income after all of that, you're looking at 4.39 billion, down 52% year over year. Not good. EPS $1.64 per share, down 49%. Not good. Okay, so a lot of your, at the end of the day, the bottom line profit for this company was cut in half. Okay, that's the reason why this company is down so much. But let's continue to go through everything. Now, the family daily active people. The daily active people was 2.93 billion on average for September 2022, an increase of 4% year over year. The family monthly active people was 3.71 billion as of September 30th, 2022, an increase of 4% year over year. Now, the family active people, when Facebook is talking, excuse me, if I say Facebook, please know I'm talking about Meta, okay? When Meta is talking about family, what they're talking about is their entire family of apps that they own. They're talking about Facebook, they're talking about Instagram, they're talking about Messenger, and they're talking about WhatsApp. That's what they're talking about when they speak in terms of family. The Facebook daily active users were 1.98 billion, an increase of 3% year over year. The Facebook monthly active users was 2.96 billion, an increase of 2% year over year. Ad impressions and price per ad. In the third quarter of 2022, ad impressions delivered across our family of apps increased 17% year over year, and the average price per ad decreased by 18% year over year. Now, advertising spending right now is down, especially since we're going into a recession. Advertising is one of those things that companies will kind of cut first. But at the same time, though, Google is dealing with the same problem. Google is dealing with the exact same issue. So this isn't something that I'm 100% worried about at the end of the day. Now, revenue was 27.71 billion, a decrease of 4% year over year, and an increase of 2% year over year on a constant currency basis. Had foreign exchange rates remained constant with Q3 of 2021, the revenue would have been $1.79 billion higher. The costs and expenses were 22.05 billion, an increase of 19% year over year. This includes an impairment loss of 413 million for certain operating leases as part of our ongoing work to align our office facilities footprint with our anticipating operating needs. So they're trying to prepare for growth at the end of the day. Capital expenditures, including principal payments on finance leases, were 9.52 billion for this past quarter. Share repurchases, okay, 6.55 billion of our Class A common stock in the third quarter, okay, was repurchased. And as of September 30th, 2022, we had 17.78 billion available and authorized for repurchases. So this is a good thing. The company was buying back stock, which is going to add value to shareholders. So this is a good thing that I would say right now. So the company is committed to adding value to shareholders, and they've got 17.78 billion available for those repurchases. So with the stock being down low, what you want is, when companies are buying back their own stock, you want them buying back their own stock when the stock price is low. You don't want them buying back their own stock when the stock price is high. And so this is going to provide an opportunity for management and for the board of directors to buy back some stock while the price is low. Okay, cash equivalents, and marketable securities were 41.78 billion. That's very, very good. That's very, very strong. And the long-term debt was 9.92 billion. So the cash heavily outweighs the debt, like heavily outweighs it. And that's a very, very good thing that we see. Now, the head count, okay, so, when we're looking at head count, Facebook employs a lot of engineers, I would imagine, to pretty much build out their long-term view. And the head count was 87,314, an increase of 28% year over year. So now let's look at the outlook. And the big problem that Facebook had or Meta had in this situation was the outlook, right? The outlook that the company had is not what people were trying to hear. Now, the CFO outlook said that we expect fourth quarter 2022 total revenue to be in the range of 30 to 32.5 billion. Our guidance assumes foreign currency will be approximately 7% headwind to year-over-year total revenue growth in the fourth quarter based on current exchange rates. To provide some context on the approach, we are taking towards setting our 2023 budget. We are making significant changes across the board to operate more efficiently. We are holding some teams flat in terms of headcount, shrinking others, and investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with Q3 2022 levels. Now, we have increased scrutiny on all areas of operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Some steps like the ongoing rationalization of our office footprint will lead to incremental cost in the near term. This should set us up well for future years when we expect to return to higher rates of revenue growth. Now, this is what you've got to pay attention to now. We expect 2022 total expenses to be in the range of 85 to 87 billion, updated from our prior outlook of 85 to 88 billion. This includes an estimated 900 million in additional charges related to consolidating our office facilities footprint that we expect to record in the fourth quarter of 2022. We anticipate our full year 2023 total expenses, so next year's total expenses will be in the range of 96 billion to 101 billion. This includes an estimated 2 billion in charges related to consolidating our office facilities footprint. We expect the slight majority of our 2023 expense dollar growth to be driven by operating expenses, with the remaining growth coming out of cost of revenue. We expect the percentage growth rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount expense growth and keep 2023 headcount roughly flat with current levels. Conversely, our growth in cost of revenue is expected to accelerate, driven by infrastructure-related expenses and, to a lesser extent, Reality Lab hardware costs driven by the launch of our next generation of our consumer Quest headset later next year. Now, Reality Lab expenses, are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Lab investments such that we can achieve our goal of growth overall company our goal of growing overall company operating income in the long run. I can't hardly talk. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of 32 to 33 billion, updated from our prior range of 30 to 34 billion. For 2023, we expect capital expenditures to be in the range of 34 to 39 billion, driven by our investments in data centers, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our capital expenditure growth in 2023. Absent any changes to U.S. tax law, we expect our Q4 2022 and full year 2023 tax rate to be similar to the Q3 2022 tax rate. In addition, as previously noted, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. Now, this is a lot, okay? This is a lot of information that the company is giving you, but we have to go back and break this down slowly but surely. Okay, let's talk about total expenses, okay? One reason why this company is down so much is because of the increase in expenses that the company is dealing with. Okay, so they're expecting that 2022 total expenses are going to be in the range of 85 to 87 billion. And they're expecting that expenses next year are going to be 96 to 101 billion. So we're talking about expenses continuing to increase year over year, but the revenue growth is expected not to increase that much. Now, let's go over here to the 10K and just for people, to have a refresher. What is the 10K? The 10K is the annual report. It's the annual report for the company, and the annual report for the company gives you a lot of information. But the one thing that they give you is the information in terms of what the company is doing financially year over year over year. If we look at the total cost and expenses for the company, right? In 2019, the company had about $46.7 billion in total cost of expenses. In 2020, the company had $53.29 billion in total cost of expenses. And in 2021, the company had $71 billion in total costs and expenses, okay? Meta just told you that this year they're going to have 85 to 87 billion in total expenses. And next year they're saying that they're going to have 96 to 101 billion in total expenses. The company is increasing in terms of expenses, but they're decreasing in terms of operating income. They're decreasing in terms of free cash flow. And I'm going to show you what this free cash flow was. Now, this free cash flow was not good. And so they're increasing expenses. But this is the thing. That's the reason why the company is dealing with the massive sell-off it's dealing with. But the one thing I will say is that they're not increasing expenses for no reason. The reason why they're increasing the expenses is because of the Reality Labs segment. This company has two segments. They have the family of apps, which is your Facebook, your Instagram, your WhatsApp, and your Messenger. And then you have Reality Labs. And Reality Labs is related to all of the infrastructure that they are building with the metaverse, okay? Now, the Reality Labs expenses are included in our total expense guidance. And they do expect that Reality Labs operating losses in 2023 will grow significantly year over year. And beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run. So expenses are going to increase for the company year over year, but they're going to have more losses, meaning that they're not going to generate any income. They're not going to generate any money from the amount of investment that the company is having. Okay, that's something that we need to understand, something that we need to consider. Now, let's continue to go through, but before I even go through what I want to talk about and really break down these numbers, let's go ahead and go through the balance sheet, right? Let's look at the condensed consolidated statements of income. So again, we see that the revenue was down year over year, and we had the total cost and the expenses up 19% year over year. You had your income from operations that was down, and you had your net income that was cut in half. Your income from operations and your net income was cut in half. Your total share-based compensation expense that increased year over year. But the one thing we're looking at everything that's bad about the company. Everything is bad about the company. Let's look at what's actually good about the company. The company does actually have some good things. Okay. And if we look at the balance sheet, if we look at the current assets and the current liabilities, the company has about $58 billion, okay, in total current assets and 22.6 billion total current liabilities. So the company has more than double in terms of assets than they do in liabilities, right? Which is very, very good. The company also has more than $41 billion in cash, and they only have about $9.9 billion in long-term debt. So the company is not in any danger financially. The company can pay for whatever they need to pay for, okay? It's just that the expenses have been increasing larger than what investors are liking, okay? But the balance sheet is still very, very good, okay? The balance sheet is still very, very good at the end of the day. Now, cash flows from operating activities, right? We're looking at the cash flow. The operating cash flow decreased from 14 billion from last year down to 9.6 billion. That's not good. Okay, that's not good. We're seeing decreases in cash flow, which is not what you want to see, right? Now let's look at the revenue, the segment information. So we look at advertising, other revenue, and the family of apps and the Reality Labs, right? So if we look at all that revenue, the revenue was down year over year. But if we look at the loss, okay, the family of apps, the company got 9.336 billion in terms of income from the family of apps, but the company lost 3.672 billion in terms of Reality Labs. So remember what the company said now. The company said that they are anticipating for them to have more, significantly more losses in Reality Labs next year, which the family of apps, that income may not increase that much year over year, because we see that income decrease year over year. So it's possible that we could have the income from the family of apps decrease year over year and the losses increase. That's going to cut your operating income down even more substantially. Now, free cash flow. Now, what is free cash flow? Free cash flow is the money that the company has for investment after they have paid their bills. They can do whatever they want with this money. They can invest the money, they can move it here, they can move it there, wherever they want to move it. Now, the free cash flow that this company had $9.5 billion in free cash flow last year. That is amazing. Like, a company that has almost $10 billion in free cash flow has the ability to do some moving and some shaking, and they can make some things happen and help the business grow. This free cash flow went down from $9.5 billion, $9.5 billion with a B, all the way down to 173 million. Like, understand the decrease in the amount of free cash flow that this company had. This is the reason why the stock is down 20%. It's because it lost over $9 billion in terms of free cash flow. Investors don't like that, because what they're saying is that you're losing all of this free cash flow. You are inhibiting the value that you can provide to me as a shareholder. That's why you are seeing this massive loss. And like I said, this is not good. Like, what we are seeing right now, this is not good at all. Okay. But what we have to ask ourselves is, right, is the company dead? And I'm going to come off share screen for a second. And I just want to talk a little bit before we go to the chart. And so I just want to talk about some things like, why are we having such a big sell-off? Okay, why are we having such a big sell-off? And one reason why I think that is because I think that people tend to fear what they don't understand. And what do I mean by that? When I say that, I'm specifically talking about the metaverse. Okay, I'm talking about the metaverse, right? The company changed their name from Facebook to Meta. Okay. And the reason why they did that was because they're trying to do heavy investment into the metaverse, right? And so they're investing all of this money, all of their cash, all their free cash flow into the metaverse, so much so that they are losing money right now, right? And so what people are saying is, they're saying that, I don't believe the metaverse is going to be anything. I don't agree with Mark Zuckerberg with what he's doing with the company. I disagree with that, right? And so there are so many people out here that are going to talk to you and going to tell you that the metaverse is not going to be anything. And most people will probably tell you that the metaverse is probably not going to be anything. But here's the thing. If there are so many people that don't understand the metaverse and they're telling me it's not going to be anything, me personally, as a contrarian person, that tells me that the metaverse is going to be something. Do I know what it's going to be? No, I don't know what it's going to be. But I know that Mark Zuckerberg is a smarter person than me. And also what I understand is that Meta, they're making strategic partnerships, right? Strategic partnerships with Microsoft, right? And the smart people, the smart CEOs in technology, like Satya Nadella, CEO of Microsoft, Jensen Huang, CEO of NVIDIA, they are saying that the metaverse is going to be something, and it's going to help reduce cost. It's going to help reduce cost in the workplace, right? It's going to help reduce cost in the workplace, because right now what's happening is many corporations are spending a lot of money in terms of updating PC equipment, and it's costing a lot of money. But the metaverse in the workplace can help reduce the amount of cost that companies are dealing with in terms of the equipment that they need in order to be able to perform their job function, right? What Meta is saying is that they're betting on creating the infrastructure, right? The infrastructure that major corporations are going to need to perform their job function, right? That's the bet that they are making. Me personally, I think that's a good idea. Why? Because the smart people that I listen to people that are smarter than me. And the smartest people in technology are telling me that the metaverse is going to be something. I don't know what the metaverse is going to be. And to be honest with you, I don't need to know exactly. We don't need to spend 3 hours on this podcast talking about what the metaverse is going to be. Me personally, I think that's irrelevant to a certain degree. What I do think is important is understanding that what are the smartest people in the world doing? How is the economy going to be changing? What is migrating? Where are we migrating towards? And what I'm saying is if a stock is down so much, and if so many people are so bearish and so many people are telling me what it's not going to be, and everybody is so negative, I'm going to look for the positive and see if I can find an opportunity. Number two, investors do not agree with the capital allocation for the business, okay? The company had $9.5 billion in free cash flow last year. This time, now it's got 173 million, okay? That is a red flag. That's a red flag, like across the board. Like, I understand. You don't want to see that big of a reduction in free cash flow. Like, you can't win there. And at the end of the day, what happens, like, you want to provide value to shareholders, and that's just not providing value to shareholders. And so what's happening is that Facebook had so much free cash flow, but now they're transitioning to like a heavy growth, like a heavy high growth company. So pretty much the story around the business is changing. You know, Facebook was an established company, and it is an established company, but you know, the way they made money was differently. Now what they're doing is they're trending in a direction to where they may be showing losses, right? They're showing losses, right? Because they want to be able to invest, and they want to be able to invest like a high growth company, because they're betting on what can happen over the next 3 years, 5 years, 7 years, and 10 years. So that reduction in free cash flow and the capital allocation towards Reality Labs, and pretty much shifting from the advertising segment, pretty much the advertising, which with the business is an advertising company, shifting over is something that investors do not like. But at the end of the day, the company didn't change their name from Facebook to Meta for no reason. Okay. And me personally, I believe that they are betting on something that's going to change the world down the line. Now, number three, what's the reason for such a big sell-off? Time horizon. Institutions don't have the time to wait because they have to answer to investors, right? Hedge funds have to answer to investors that want returns now. Most investors are saying to themselves, they're saying, look, I don't have the time to see if Mark Zuckerberg is going to be right. Yes, you know what? You know, Devon, for the sake of argument, the metaverse may actually be something. But me personally, I don't have the time to sit here and wait to see if it's going to be something. And if I'm on the set, and if I am on the skeptical side, and if I do not believe that the metaverse is going to be anything, why would I stay in something for this long over the long term and lose money? Like, my time horizon is very, very short, and I may have to answer to some investors and to some shareholders that may not agree with that. Me personally, I'm not an institutional investor. I am a retail investor. So with me, I have all the time in the world, right? The longer I can lengthen my time horizon, the more likely I am to create, generate, and sustain wealth. I don't have to answer to anybody. I don't have to answer to anybody at all. So with me, I can just sit here and just wait and just chill and make the assessments, right? Make assessments, see where the stock is. If it goes lower, if I believe in it, if I believe in the story changing around the business, if I believe in what the metaverse is going to be, this is something that I can position myself to be in, build a position over the long term, see an opportunity in a stock that's down so much. And the advertising revenue is declining with heavy competition from TikTok. And on top of that, we are heading into a recession. And so, because we are heading into a recession, advertising revenue is going to be decreasing. But this is not the only thing that, like, Facebook isn't the only, or excuse me, I'm sorry, Meta is not the only company that's dealing with this problem. Okay. Google's dealing with the same issue, right? Google was down 7% today. Why? Because of the lack of advertising revenue, advertising revenue that the company was able to deliver on. That was something that was just not going to work for the company. So when you look at all of those issues and all of those reasons, that's why the company is down so much. But at the same time, let's see if we can look into this. Let's see if we can see some opportunities, okay? If you are patient, I believe if you actually believe in the story and if you are patient enough and you have a long time horizon, I believe that you have the potential to really truly make a lot of money with this stock. So let's just see, how bad is it down? How bad is the stock actually down? And so let's go ahead and share my screen again. But this time, what we're going to do is with the share, this time, what we're going to do is we are going to share the chart, right? We're going to go through the chart and we're going to see what we see here. But like, what do we actually see, okay, with this stock? And if you've been paying attention and if you've been tapped in with the Trade for Yourself podcast for long enough, you understand that, I've been using Thinkorswim a lot. I've been using Thinkorswim a lot because I do think that Thinkorswim is very, very good in terms of charting and in terms of the tools that you can utilize for investment. They're very, very good in terms of the tools that you can utilize for investment. And what we're going to do is, this is a month, so keep this in mind, y'all. This is a monthly chart, right? So just to remind people, remember, we're looking at these candles here, and these candles represent months. Okay, these candles represent months, right? And so if I'm just looking at this stock has really truly came down a lot, right? The stock has came down a lot. And so let me look at where the stock is right now in the after hours, because that's very, very important, because I want to see, okay, so the stock is around $104.62. So the stock is down almost 20% in the after hours, okay? It's down almost 20% in the after hours. So let's look at how far this stock is down from the all-time high. Like, how far are we down? Like, how far are we down from the all-time high? If you come all the way down to 104, you're talking about this stock is down over 72.94% from the all-time high. That's very similar to the drawdown that Netflix had. Netflix was down about 75% from its all-time high. And, Facebook and Netflix are two totally different companies. But the reason why I bring Netflix and the reason why I mentioned Google earlier as well is because they're all classified in the same sector. They're all communication services companies. At the end of the day, we know they're tech companies, but they're classified as communication services companies. So that's the reason why I wanted to bring them up. So what I'm going to do is I'm going to place a price level at around $104, and let's see if we can. Let's try to find support somewhere for this stock, because the stock is just down so much. And when the stock is down this much and you have to go so far to try to find something, you really truly have to put a lot of things into perspective. Now, remember, this is a monthly chart. Every single candle represents trading over a monthly time span. And so you need to go all the way back until January, February, March of 2016. You have to go back over 6 years, almost 7 years, because we're about to be in 2023 now. You need to go back almost 7 years to get back to a point to where Meta was. Okay. Like that's how bad, that's how significant this loss is for this company, right? Like, and also let's look at another metric, RSI, right? The relative strength indicator, right? The relative strength indicator, okay, measures the overbought and oversold levels for a stock. Over 70 were overbought, under 30 were oversold. This is a monthly chart now. This is a monthly chart. A lot of times we're looking at trades and whatnot over short term. You know, we may be looking at the weekly, we may be looking at the daily, right? For RSI, this stock is oversold on the monthly. This stock is oversold on the monthly chart, but this only represents the trading from the day. This is not going to even represent what trading is going to be like tomorrow when the stock actually does come down and we actually do see it, right? We actually do see that heavy decrease, right? So this stock is oversold. Now, remember something here. Remember what happened. And to be honest with you, I'm going to attempt to draw a Fibonacci retracement. I'm going to attempt. Now, this Fibonacci retracement may not be worth anything, but I'm going to attempt to draw a Fibonacci retracement all the way back to 2014 on this stock, right? Where this stock was $56.49. Okay, I'm going to attempt to draw that Fibonacci retracement just to see, like just to see where we are. And if we look at the Fibonacci retracement, okay, if we look at the Fibonacci retracements, what we see is that we're below the 23.6% Fibonacci level. So it's not necessarily a stock that you want to trade at all. You know, this is not a stock that you want to trade at all because the stock is literally broken. But if we just look at like let's just look at it from a long-term investment perspective, how do you feel about the company? What do you believe about the company? Like, that's very, very important. And it's really, truly amazing to see these levels of decreases that we have seen in the stock market. Like, we've seen 80% declines. We've seen 90% declines. I know in some stocks, we've probably seen 95% declines in some areas. And so when I think about this, I'm like, man, like when everybody is just so bearish about a name, like when everybody is just so bearish about a name and so negative about a name, everybody is so fearful. The way I think and the way I operate as an investor, it forces me to take a look and it forces me to be greedy, because there has to be something that some people don't understand and something is missing. Same thing on the other side. When everybody is too greedy and everybody thinks everything is great and we're on all-time highs over and over and over again, I have to be fearful because everybody's too positive. There has to be a negative here, right? You have positive and negative charges that balance you out. Like, there has to be positive and negative in every single thing. And so when I think about this and I look at this chart, like I said, like, this is pretty much all I have for today to really look at this stock. But to answer the question, is Meta dead as a stock? I don't think they're dead as a stock, because me personally, I believe in Mark Zuckerberg. Mark Zuckerberg is the founder of this company. He did not change the name of this company for no reason. I promise you, y'all, he didn't do that. There is a bigger play here. Most people don't understand what the metaverse is going to be. Most people don't understand augmented reality and virtual reality and mixed reality and the things and the way that the economy is going to change around it. The smart CEOs are paying attention to what's going on in the metaverse, and the capital allocation strategy for these companies is different, right? It's changing. Like, these are big cap companies. These are large cap companies, greater than 300 billion, a trillion in some cases, but they still have so much growth left in them because of the strong balance sheet. Facebook may be dealing with some cost pressures, and Facebook may be down 20% when we wake up tomorrow. And Facebook may actually continue to go down because the company is not going to be making any money related to Reality Labs in the metaverse next year, and maybe even the year after that. But if you have a long-term time horizon, and if you actually do the research into what Facebook or Meta is going to be with the metaverse, and you actually lengthen that time horizon, the fact that Facebook is down so much, this really truly may provide us an opportunity, okay, to build some wealth with a company that everybody's just trying to throw in the trash and throw to the wayside. Because I'm telling you, you're going to hear a lot of bearish news. And don't get me wrong, it's warranted. 9.5 billion in free cash flow down to 173 million. That's a problem. Your operating income got cut in half. That's a problem, right? Net income cut in half. That's a problem, right? Expected to have more operating losses next year than you have this year. Yeah, that's a problem. But let's look at the positivity. Can we see some opportunities here? We may be able to see some opportunity because now we have some time. Everybody's throwing it away now. Everybody's throwing away Meta now. While everybody's throwing it away, this is giving us an opportunity to actually do some research and actually gain a level of understanding around where the company is going moving forward over the long term. Again, as always, I appreciate y'all for just spending the time here at the Trade for Yourself podcast. Okay, please please subscribe. Please make sure you like this and subscribe. Okay, I'm telling you, I'm really truly trying to add value to you guys. Okay, so please reach out to me in the comments and let me know how you feel about this company. Do you believe it's dead? Me personally, I don't think it's dead. That's just me calling out. I don't think it's dead. I really truly believe that we may have an opportunity if you believe in it and if you have a long-term time horizon for this company. All right. As always, remember, y'all, don't pay for it. Trade for it. I'm going to catch